G'day everyone, welcome to the second episode of Breakout Wednesday. It's July the 3rd, 2019. A bit late today, I had some technical problems, apologise for that. I'm still getting used to all the software and I'm obviously not very good at the IT stuff. So look, thanks for all the positive feedback after last week's talk. I'm glad that some people got some positives from it, and a few people have reached out asking for information on what scans I do to find these tight base setups. And so the purpose of today is to go through my scanning process and what I do in order to try and find them, right? So first of all, there's no one single scan that's magically going to find all of these tight base setups. It's a matter of I've got 4 or so consistent scans that I do, and it's a matter of just finding stocks that look promising, that look like they're setting up, and I whack them in a watch list and I stalk them, okay? And most of those stocks will never tighten enough, or they will break out before I think they're good enough or whatever, and I won't trade them. But say 1 in 20, 1 in 30 will just tighten up perfectly and I'll be really happy and I'll go for it, okay? And so that's how I do it. And so without further ado, let's get into it. So the first scan I love is Frank's pattern, and I don't know how Frank quite pulled this off, but he's really come up with an awesome scanning tool here. So I'll do this most days, or whenever I can, and it finds winner after winner. Now, first of all, let's not talk about this too much, other than the fact that A&O, this whole move has been coming up in box scans, in Frank's box scans. This was one, this was one, this was one, this was here one, and there was a bunch back here. It's forming another one now. I'm not overly interested in the current one, but it's the big moves. It's pretty hard to miss them when you're doing these scans. Most stocks will come up in this one. Okay, CSR. Let me just try and find it. I think Frank's talked about this a few times. This stock's setting up. It's constructive base. I think if we look at this on a weekly chart, it's got this big up bar here on big volume, and we've got 6 weekly bars now that are all inside this big formation candle, and they're all in the top half of it, which is a sign of strength. And this stock isn't for me. It's a bit slow moving, but it certainly is setting up nice on the technical point of view, and it's certainly one to watch, depending on the sort of stocks you guys like to trade. So now the next one, CVN. The Protrader boys have been talking about this for a while. It's got some good fundamentals behind it, I believe, and from a technical point of view, this thing is setting up in a box, and it's hit this level twice. It's a decent setup currently, but what I'm wanting it to do is tighten up more. So it's got this like cup formation here. I just want it to form a handle just over on the right hand side and just tighten up on low volume and then break out. So ideally that process would take another few weeks, but we'll see. It looks pretty good on the weekly chart too. I just think if it could rest more, it's going to have a more powerful breakout. And generally speaking, a lot of the stocks that I look at, I just want them to base longer. You can't base for too long, and the nicest, the tighter it gets, the better it's going to be. And so if this can just form a little handle, that'd be great. So that's another one I'm stalking. Another one I found in here, just because I know there's all these people that just love all these cheap penny dreadful things, and Liontown obviously had something exciting happening here, and it's stormed up on massive volume. It's forming a box now, consolidating. It'll be interesting on a break of this level. Stop losses on these little penny dreadfuls are hard. If you put it just below the resistance level here, you're going to get whipped out 99% of the time. I think the fact is this is high risk, high reward stuff, and so you got to use a wider stop. And so my initial risk would be based on the bottom of this box, just breaking below the bottom of that box. But then if I've got a decent breakout, I'd be trailing my stop loss up aggressively and trying to get it to break even or there to thereabouts as quickly as possible, and to reduce the risk. And so that's how to play a stock like LTR. So there's plenty more there, but I'm going to try and keep this to half an hour, so I just need to move on. So the next scan I do on a frequent basis is Sam's Darvas Box. These are the settings I use. And so the whole purpose of this scan is not to filter much, it's just to find heaps of boxes, and I want to do the filtering myself, right? So I've got this, all these down to tiny values, so it's going to find most boxes out there. 50-day, and I'll just do this scan regularly, and sometimes it will just find quite a lot of boxes, and I'll just quickly scroll through them and spend like half a second on each one, right? So let's just run through a few. First one I wanted to quickly touch on is JIN. JIN's been going up for a while. This base back here is just super nice. It's just sitting above its moving averages. The moving average is all tightened up, and then it broke up above it, which is really ideal. But up here, I mean, this thing's extended now. The moving averages are a bit further apart, obviously a lot further apart than they were back here, and so it's a bit extended, but it's a lead in stock, and who knows how high this can go. The thing is, because it's overextended and because it's had a massive run up, I want this to tighten more, and so I want to see 3 weeks of consolidation before breaking. So that doesn't include this formation candle, right? You get this candle here, and then obviously 3 weeks after that. There's this awesome book that a guy called William O'Neill wrote called How to Make Money in Stocks, and he came up with this 3 tight weekly candles, probably murdered the correct saying of that, but what he's really saying is that for a short-term base should be about 3 weeks long, okay? And I think it's a pretty good rule, because just bases that are much less than that just tend to have a much higher failure rate, whereas if you're just waiting for bases to set up just a bit longer and just tighten, right? Really what they're doing, the longer they are, they're tightening up, right? And the more something coils, when it's going to be more powerful and have more energy behind it when it uncoils, right? So when it springs out. So that's the whole point of tightening. And so I'll just whack this in the watch list, and if it breaks out tomorrow, it's going to go without me, so be it. No worries. If it tightens for another week or so, I'll put my orders in and see what happens, okay? So the next one I just wanted to, MPL. Oh yeah, so I think I mentioned this last week maybe, and I put it in the Facebook group. The only reason I bring it up today is because I found this stock via the Darvas Box scanner, okay? And so it just finds so many of the setups, and it's just such an easy way to find trades. So, okay, moving on. Next one. WTC. So this formed a nice base. Let's just look at WTC on a weekly chart, how smooth that is. It cuts out all the noise and the chopping around, and it broke out and came up. And now it's forming a box on top of this base, which is great. But once again, this is a short-term box. This has to form its own legit pattern here. And we need three weeks for that. And so we're into the second week at the moment. I'm just watching this tighten. If it goes in the next few days, it's going to go without me. But if it tightens up for another week or two, then I'll consider jumping in on that. So that is that. Now moving on, next one, Telstra. So I don't know what happened there. Anyway, Telstra is obviously in a strong uptrend. It's had a really good year, and it's been based in here. It's obviously a bit extended. These moving averages are pretty far apart. It came down, bounced off a 21-day. It's a sign of strength. Who knows what this thing is going to do? But there's blue sky above it, and it's had, it's probably 10, 13, whatever candles of sideways action. And so this is a decent tight base. It's not for me. It's a bit slow moving, all that sort of stuff, but. It's certainly technically a pretty good setup, and it just depends what sort of stocks you like to trade, right? So moving on, XRO. XRO is, this isn't the best setup in the world or anything, but this is a leading stock. It's been going up for a long time, so a lot of institutional support, and it's in a really, really strong uptrend, and who knows how high this is going to go. So it broke all-time highs here, and then it came back and it was a false breakout, but it shook a lot of weak players out, and it was, this retracement was on low volume, and I think there's just, a bit of a shakeout and transfer from, weak holders to strong holders. And so generally speaking, when you get a base failure, a breakout failure, and it goes back down, and then it goes back up, sometimes the second breakout can just be so much better than the first. And so I'm certainly watching this. I've got a core position from a while ago, and I'm not going to add to it or anything, but it's an interesting chart, and I'm going to
it's an interesting one to watch out. The leading stocks usually continue to lead for a lot longer than anyone thinks they're going to, and who knows? Maybe we're in the midst of the early stages of a big bull market, and if we are, this thing could double or triple from here. And that might sound ridiculous, and it probably is, and it probably won't do that. But who knows what it's going to do? Sometimes, Amazon's back up near $2,000, and a lot of people who probably never thought that would happen. So it just, no one knows what's going to happen, and it's just a matter of following the signals and just letting the market do what it wants to do. So now let's move on. The next scan I like is another Darvas scan, but a weekly. Okay, right. So here are the settings. You guys can just look at them, see them on the screen, obviously. Really basic settings. And I do this scan, let's say on a weekly basis, okay, just once a week, that's all. The point of this scan is it just finds big bases, and it's less time sensitive, so you don't have to do it too frequently. And I like it just because you take a step back, put it on a 5-year view, and just look at the big bases that this scan can find. And so we've got Santos sitting in a weekly Darvas box. It's, if it breaks this, it's going to be its highest price since May 2015. It reached about 750 back in September 18. It reached that again in April this year, and then it's just basing sideways. And so this might not break up; it might just break down. In which case, no harm done, right? But if it just continues to base sideways, and let's say breaks up in maybe a couple months from now, whatever, it's certainly going to be a significant point for Santos, and perhaps the start of the next big uptrend. So, this is just an example of how good the weekly Darvas scanning function is. I could run through this and find so many other stocks, but I won't today. But that's just one example. Look, the next scan I like is in scan for basic patterns, and I save them down here. So try point resistance weekly. So this is just a scan that's on weekly data, right? So weekly here, and I just tick ascending triangle and try point resistance, and then that's it. Okay, basic filters here, and then I scan. Okay, now this hardly finds any stocks, but which I like, and it just one example. By the way, I remember this stock. This came up in I think it was a double top scan. I think this was also a weekly Darvas Box scan here. I remember this one too. That was, anyway, I'm getting sidetracked, but all these breakouts came up in weekly Darvas scans or normal Darvas scans, and so they just find such good setups, right? Anyway, but that's in the past. Let's have a look at now. Actually, that's not the stock I wanted to look at. Let's go to Pen. All right, so this found an ascending triangle on a weekly chart. We have, high here of 33 cents, high here of 33 cents, high here of 33 cents. There's obviously resistance there to at 34 cents, but this is pretty strong resistance here at 33 cents. So hopefully, if you can get above there, the momentum will be enough to take it above this resistance here. And this is just an example. The weekly tri-point resistance and a weekly ascending triangle scan function can really find some nice bases. So I do that scan quite a lot, and it's really good. Next one. Oh yeah, so I've got this scan I call it the everyday scan. I don't do it every day, but I mean the intention was, but let's face it, you don't end up doing it every day because life gets busy and all that sort of stuff. So this is just on daily data, and it's an ascending triangle and tri-point resistance and 21-day breakout and volume above about 3,000, just under 3,000%. And so I do that frequently, and it comes up with so many stocks, and this is how I go engage from the market. I just quickly run through those. I spend like a second per stock, so it really doesn't take very long. And it's very hard to miss big moves when you're doing that frequently. You'll find so many stocks setting up. And it also just tells me what stocks are strong, what sectors are strong, what sort of stocks are holding their breakouts, all that sort of stuff. Okay. All right. By the way, I didn't mean to bring this 360 thing up. It was obviously just the top there. I mean, this is a pretty tight pattern, but just have a look at. Remember, I looked at this yesterday. I mean, it only did $584 of money yesterday. So, unless you're going to just trade a tiny amount, you're just going to get stuck in that thing. But anyway, getting sidetracked again. Let's move on. The only other scan I sometimes do is I play around with just moving average stuff. So, I play around with a lot of these things actually, but sometimes if it's a rainy day or, got a bit of spare time or whatever, I just would like to, I sometimes just scan for stocks above their 200-day moving average. So I untick this. Sometimes I'll look, between $1 and $4 or something, and I'll just scan every single stock above it on its daily data, above its 200-day. And I like doing that. It just resets everything. It's good practice, and it just gives you an idea of the sort of stocks that are setting up and the best sectors and all that sort of stuff. And yeah, it's a good thing to do. I play around with these other things, but generally speaking, I don't look at any indicators. None of this RSI or anything like that. I mean, it's just, I don't know of anyone that makes money with that stuff. I could be wrong. Someone might email me and say they do, but I don't think it's a long list of people that succeed using that stuff. So now let's move on. So there is a watch list I came up with just of some random stuff to just run through. I had a guy just reach out to me who took this trade. Okay, he took this breakout here, and I guess my thoughts on this is that I mean that's a breakout, and it's going to work sometimes. I think looking at a weekly chart, it's really hasn't consolidated at all. Okay, on a daily chart, it's just had 1, 2, 3, 4, 5 days. And I know, I mean, coming back to, I think I've already touched on, I know like last week we talked about NCM. It's different. I mean, this is, once again, I think we mentioned this today as well, but this is a mining stock, a gold stock in a very strong, move in gold at the moment, and sometimes you just need to take those setups. Okay, it's like when crypto's moving, the crypto stocks set up and they don't really give you 3 weeks, and you just need to take them. But this 5GN, it's not a huge base here. The chance of failing is higher, and I just think that it's better to wait for bigger bases than this. But if you're going to take it, where's the stop loss going to be? I mean, first of all, if you get a breakout and it pushes up, well on the first day, then I'd be having a tight stop personally, just back inside this base, and I'd hoping it would just run, right? But let's say hypothetically someone's at work and and they get filled and they get home and they see this candle down here and it's a bad close for them. Obviously the logical place really is just below the bottom of this box. And then you just take the loss and walk away. If I got home and this was just closed down here, I wouldn't really move my stop up, because this is not far from here, and this still might run back up north and head on its merry way. Who knows? So I'd never lower the stop loss, but I'd just hold true to it and see what happens. Obviously looking back, this base here is super nice, super tight, all within inside this bar, and these moving averages are closer together. So, the more a stock runs up, obviously the riskier it gets. But that's life, and in fact is in a good market, a lot of them run up. But I just think for me, I like that to base a bit longer and tighten a bit longer before considering an entry. It's just about taking those high probability things and stalking it, and just not being scared to miss trades. Like, there's so many trades out there, you're gonna miss heaps, and that's cool. There's going to be another one around tomorrow. So moving on, Arena. I just bring this stock up because let's just wait for it to load. Okay, so this stock formed. I had to make a decision. I'm nearly fully invested, didn't have much capital left for trades, and so there were 2 stocks setting up the other night which I liked. This one and DEC. Okay, and DEC was a nice tight base on a daily chart, but if we looked on a weekly chart,
just a bit, only 2 weeks of base in, just a very short-term base. This stock deck, they're in shoes and Ugg boots and running shoes and that sort of retail stuff. ARNA is is a pharmaceutical company, which is a hot sector at the moment on the Nasdaq, and it just looks nicer on a weekly chart. So I think when you're stuck between choosing stocks, the way I try and differentiate is which one looks better on a weekly chart and which one's in the better sector. Okay, and if they're in the same sector, which one looks better on the weekly chart? And there's a bunch of other things, obviously volume and stuff, but assuming volume is all equal between them, then it comes down to, for me, which one looks better on the weekly chart, which has a bigger base is what I'm getting at, okay? And this one did, so it saved me on that occasion, but we'll see how that trade goes. So this is just another stock. It's a recent IPO on the New York Stock Exchange. It's been going up, based, broke, pretty classical setup, and that came up in a frank scam, by the way. It just finds winner after winner. So this chart, it's come up in the Darvas Box. I think this one, it's just basing sideways. I like that. I'm just going to wait for that to tighten, hopefully. Compass, that's tightened a lot. I'm going to go with that one. Catalyst, so this is a ascending triangle that it had a big gap down here. Some competitor brought out, announced news that they're going to take it on. Massive volume, just big climactic volume down here. A lot of money piling into the stock. It's not just selling going on here, right? There's obviously a lot of, the same amount of buying and more buying up here. Anyway, massive volume. This doji closed towards the high. It's just a lot of money pouring into this, and then on-balance volume's been trending up ever since. We've got 2 points of resistance, about the $4 level. And rising bottoms. It's pretty classical ascending triangle. It's held as 200-day moving average. It's still above that. It's above its 21-day. It's above its 100-day. Its 50 is the only one that's pointing down. So if you take the depth of this triangle, it comes up to about here, which is just a few ticks below the low of this day. And so it would be nearly a gap fill for that to get filled. I think there's enough adding up there to take a trade. And so I've got some orders in, and we'll see how that goes. Walt Disney, I love this company. I've been in it for a while. I guess every now and then there's a few stocks out there which I like from a fundamental point of view, just based on, research and reading and things I listen to and all that sort of stuff. And if we just let's just have a look at a monthly chart of Disney. Okay, so this is a monthly chart of Disney. This thing based back here between, 2000 and 2012. It spent 12 years in the base, and when it broke out of that 12-year base, it went from $44 up to $120. Okay, slowly, but for those who were patient, it just went up, right? And then it spent from 2015 until obviously 2019 in a sideways base, an ascending triangle sideways base, and then it broke up. It broke up on massive news that they're taking on Netflix in the streaming world. And so, anyone with kids, watch out. It's going to be, before too long, they're going to be asking you for a Disney subscription as well. And so the market likes it. They've bought 70% of Foxtel. And, I don't, a lot of the time with the short-term trading, I have no opinion on the fundamental stuff, but every now and then I like to find stories which I believe in, and if the technicals agree with it, then I will sit with this, using a 200-day moving average, and I'll sit for as long as I can. And so I've got a core position, and I'm going to buy a bit more if it breaks out of this box here. This has come up in a Darvas Box and a Frank Box, I believe. So that's pretty cool. So anyway, that's something different for you. Evolution Mining is just a little Aussie gold stock. It's not looking overly good on the weekly. Hasn't really based much, okay, but on the daily it's looking pretty good. It came down, bounced off its 21-day, bounced off this resistant turn support line, and a break of that, and it could have a nice little move up. And so I thought that was an interesting one. Aluka, nothing there yet. I'm just waiting for that to tighten. That can tighten for another week or two, and just stay in this tight little range. It could be pretty cool, but it might not. This is just a really nice tight range here. It's obviously broken up, so it's too late. I missed this one. You can't get everything. I think there was Graham from the Facebook group got it. Well done. It's pretty good setup, and
a nice tight range. It's another good example of these, cheaper, penny stocks, and it's not quite I guess it is a penny, but your stop losses just totally had to be a bit wider, right? Like, this, people probably got filled on this day, and then it whipped down here, and everyone was, having a bit of a panic, and then it just suddenly, stormed back up. And so if you had to stop loss right below this resistance level here, you're going to get, whipped, 99% of the time. So you got to give it more room. And these little cheap stocks, this thing could double, who knows, or it could fall back down and get stopped out. But my view on this now is that if it, falls back down, it's had a decent move, and if you have to hit break even, so be it. Don't that's life, but it's a decent chance that that's going to go for a run, and so that's a good setup. Now, MEI, I'm looking at this base just forming, and I like it, so I'm going to just see what happens with that. But that's pretty cool. That one went today, so we'll move on from that. So this example, I guess I've showed a lot of charts of things that have turned out well. This one, I traded this last night, in and out very quickly. Obviously didn't go well. So I like this pattern. I don't regret taking the trade. I'll take that trade any time I see it, right? This is just trading, right? It went bad. So I calculated my risk based on a stop loss down here at 7.36. However, that's just worst case scenario, right? And I had a stop loss below this little candle here, and so I think I got filled at $8.15 or 16 or something like that, and I'm out of that. So I lost like 0.3 of 1% of the account on that trade, and that's cool. I just put it in the books, move on. You can't win them all, and the ones I'm going to lose, it's my job to try and keep the loss as low as I can, as small as I can, and try and save the money for the next hopefully winning trade. MVF is setting up. It's pretty constructive. I just want to see this base for longer. Look, this is I don't know why I have this here. I just have a feeling it's got massive potential. It just, if it forms a base, it's a gambling stock. I don't really like gambling stocks. I'm probably not going to ever trade this thing, but it's got massive growth in America. America's just opened up. Obviously, most people probably know this, but they've just legalized online gambling in most states, and so there's just massive growth potential for PointsBet, because that's the market they're headed for. They have Aussie markets, but they have a business in Australia, but it's the overseas US market where there's going to be where most of their growth is going to be seen. That's a tiny base there. I don't think I'm not touching it, but for those that don't want to trade in gambling stocks, just watch that. Wait for it to base, which it will with time. PNV that ran today. This little stock, look, it's setting up. Its volume is lovely, and it's a pretty recent IPO. This thing could go a lot higher. Who knows? It's a bit extended up here, but it's not that extended. This was a pretty big base here, and it just hasn't really gone up that much. I'm not going to touch it. I don't have enough capital left. I'm pretty much fully invested. So but it's a decent setup. I kind of wanted that one to tighten a bit more, but it's pretty decent. So your Royal Gold, that's just that just formed a few inside bars, broke up last night. I'm watching this guy. This is anything below $5 on the American market is pretty much a penny dreadful. And I'm watching this base. It's a base in for a pretty long time, and if this can wake up soon, it could be in for a big run. Look, WAF. I thought this was interesting. I think I saw this posted a few places. This is a pretty good base. This could go for a massive run. I'm not personally going to trade it. I think there's a lot of left hand. So there's a lot of people that say like bought here and here who have just been sitting there, feeling a bit upset, and they're just going to see a massive opportunity to get out at break even. And I think that's the whole point about this overhead resistance. It's not enough blue sky there for me. That one is a miss for me. X-Ray is just a stock that's
setting up with inside bars on the Nasdaq, so I'm just stalking that. Okay, so that's it for this week. I'm just going to leave you with an interesting chart. It's another long-term thing I've been in for ages. Good old Macca's. Let's just look at it on a monthly, and let's just go up to 50 years. Okay, I mean, this thing's been going up forever, and it's good old Macca's. There can be a lot to said for long-term investing if you have the patience and you believe in the story. But whatever your views on fast food, I'm a massive fan, and long live McDonald's. Okay, guys, I'll see you next week. Cheers.